Well, good evening, all. Ira Epstein with your metal report. And this metal market wrap-up is for the evening of Wednesday, the first day of May, 2024, time 5:20 p.m. Central Time. Sorry I didn't put out the update the last two mornings. I've had early morning things that had to get done, and I think I'm through with those at this point. My wife projects, as you can imagine, and they're early, believe it. So we had the FOMC meeting today, and I walk away with it as to higher for longer. The Fed has no reason to cut rates right now. The amount of deflation or lack of inflation might be the better word, isn't there. The first 3 months of the year were a disappointment for the Fed. Labor market remains strong, but they do think things are not going to get worse. So when asked if they think there'll be a rate hike, they don't foresee that. It didn't sound as though they discussed it, but that wasn't off the table. That's clear. So now it's a matter of waiting. The Fed gave us a few ideas. They said that they, given a 0.2 of an increase in the unemployment, that would get their attention. So we watch that to see what that's going to do. They want to see the inflation number start moving down. They're disappointed in the shelter number not falling, but the Fed even went into the chairman talking about, leases renew and they go up, but not as much as maybe a new tenant in there. So he gave us some of the spiel. But the simple fact is shelter costs make up 35% of CPI and they're not down. Then you can argue which metric they're going to look at for inflation, because there are metrics there that are still showing inflation high, 3.8, 4%. There are others that show 2.7. So it's all going to be a question of what they do. But I got the impression they would just like things to tip. They said they're not political. They paid zero attention to when they can make a move on interest rates. Don't believe it. Don't believe it for 1 second. These guys are appointed by presidents. Got that? They're not going to go in there to hurt them. I know what they say, but I also know what we all believe. Now, you may believe the opposite, but that's your right. Coming into today, I mentioned to you yesterday that there were huge bets made in the options market that you would get 1% volatility today. In other words, a full percentage point up or down in the S&P. You wouldn't know it looking at tonight, but I promise you it happened. The Dow went up 500 points today and then gave it all up. It got wild when the press conference ended. Another event took place today. The Japanese yen, this is a sell-off. This market got to 65.29. So the only thing that would make that happen, it began at 3:15 in the afternoon Central Time, is intervention. Now, the bank's not going to come out and tell you at this point that they did or didn't intervene. It smells just like they did it to give the traders the warning. I've told my traders to drop the yen for the time being as to one of the vehicles they want to look at, because you're going to have too much volatility, and so far that's proven accurate. So in the gold market, we're in a bit of a correction. There's no question in my mind, at least, the major trend is up. I was listening to Jeff Gundlach of Double Line when he's saying he'd like to buy more gold. He still owns it, but he'd like to buy it at the 2,200 level. That seems a pretty far ways off, and what would drive it back down there has got me questioning why even mention that level. Right now, the market's working in stages on the downside temporarily. You've got a higher high, lower low pattern. That is not a trend. The market has stayed under the 18-day average, so the bias stays down. I define bias when the market is trading under that number, the bias is down. Over it, the bias is up. Bias is a filter. So you get a buy signal and you have bias down, I pass it. You get a buy signal in the swing line, but you're under the 18-day average, I pass it. I'm just looking for markets then to make moves if they're going to go back there and fight a battle. Well, that's just what's going on right now. You got down to the zone over the past 48 hours where you challenged the lower Bollinger Band and you bounced twice. Okay. And you're oversold. So this market has to restructure itself in order to say you want to get bullish on it at this point. I am a long-term bull. I do believe the market, though, has to get over that 18-day average to get me interested, and without that, I'm sidelined for the time being. Gold is gaining on silver as long as it stays over the 18-day average. That's the pattern it often does. You have higher highs, lower lows, and you're oversold. So I don't see anything there that's going to get me excited one way or the other. In the copper market, I'm hoping, the word is fingers crossed, hoping. I'd like this market to drop down closer to the 450 level and then from there establish the base to buy it again. I believe copper is one of these markets that as the central banks gang up in June and begin in domino effect, not us, but others, to start testing the water on rate cuts, that when that happens, a couple of months later, what happens is the demand picks up in the economy. That's the whole idea, and copper should see that demand. We're also seeing the question is China's demand holding up? Well, right now, the fact that you went up that high means it did. They're half the world consumption of copper, so you pay attention. But none of the work here is screaming, get in, rush out, and buy it. The weakest of the metals is turned out to be the strongest on the chart action. Platinum has an absolute higher low, higher high over the 18-day average, so the Johnny-come-earlies are probably going to buy the first pullback to the 18-day average. I don't think they'd be happy if you got through the low right through here, which is in that let's go to it exactly. We don't have to guess on it. Right here. They wouldn't be happy if you got under 940. That's a $15 risk, which is $750 on a futures contract, but the trend is up for a change in that market. And the dollar had an outside day down. I like outside days. Sounds to me like that Fisher commercial. I like to fish. Remember, he does that all the time. Well, if you take out the high of today, either on Thursday or Friday, this says it's a bear trap, and you probably go up to wherever the Bollinger Band is. If you get follow through and take out the 105.27 level, it means that you're just not ready here to hang into the bullishness that the market may be offering. So we wait, we see how the market's going to respond to it. Remember, these settlements are based on a 2 o'clock close, most of these in currency markets, and the markets did swing all over the place after that particular point in time. Now, I want to remind you, for our free offerings, we have a host of them. We've got about 10 of them all together. And as you scroll down on our page of our free offerings, this page drops down. The blue here represents, you give it a click, it goes into your cart. And then at the bottom of the page, you have your name, your email address. You just click submit. We take care of everything, get it out to you. You can get our price counts. I solidly recommend, if you've never seen price counts, number one thing you should be getting. Gives you an idea where markets might go once a trend sets in. It's pretty neat the way it works. We have full explanations for it, and we send them out daily, by the way. And then at the end of the week, we send a whole package that gives you what they look like in a host of different markets. So I think you'll really like what you see in that. And then the Pivot Point free series, the Arun Indicator free series, time and price coming together. We've got profitable trading ideas in any type of market. Put it together and you've got something. IraEpstein.com, free offers, or move your cursor up here for the free offers there. You'll see an icon. You have a good day.